Vietnam's story is one of reform and trade. Starting with the Choi Moi renovation reforms in 1986, Vietnam opened its doors to foreign investment and global markets. By the 2000s, it had become one of Asia's fastest-growing emerging economies. Exports surged, particularly in manufacturing. By 2019, electronics and textiles together made up over half of Vietnam's merchandise exports. These factory outputs were largely driven by foreign-invested firms. In fact, government data show companies with investment from foreign firms account for about 70% of the country's exports. This means 3/4 of Vietnam's exports come from FDI-backed factories, a share far higher than in most countries. This FDI-led export model lifted growth. Before COVID, Vietnam routinely grew 6 to 7% per year, helping millions escape poverty. Even after the pandemic, its recovery was powered by exports and foreign investment. By 2024, Vietnam's GDP hit about $476 billion, thanks mainly to a 14% jump in exports and nearly $25 billion of new FDI. The latest data confirm the pattern. Exports FDI fuel GDP growth of 7.09% in 2024. In short, international capital and trade have been crucial to Vietnam's economic rise. Within this FDI story, South Korea is prominent. In recent years, Korea has often been Vietnam's top source of new FDI. For example, in the first 11 months of 2024, Korea invested $3.89 billion, 12.4% of total FDI, making it the second largest investor after Singapore. Cumulatively, South Korean investors have poured about $86 billion into Vietnam's economy by end 2023, more than any other foreign country. These funds flow into factories, malls, energy projects, and more, shaping whole industries. The surge in Korean investment accelerated after the 2015 Vietnam-Korea Free Trade Agreement, VKFTA, which slashed tariffs and boosted confidence. In fact, between 2015 VKFTA start and early 2022, South Korean FDI stock in Vietnam nearly doubled from $43.7 billion to $78.6 billion. Vietnam is still Korea's favorite investment destination, notes one analysis, even amid global uncertainty. By the numbers, South Korea's economic footprint in Vietnam is huge. FDI stock, approximately $86 billion, cumulative investment, far above any other country. FDI projects, approximately 9,265 Korean projects as of March 2022, mostly factories. Leading industries, electronics and manufacturing dominate, well over half of Korean FDI. Construction and services make up for growing smaller shares. Trade ties. Vietnam is Korea's third largest export market, and SK is Vietnam's third largest export destination, about $23.4 billion in 2023. Bilateral trade hit roughly $78 billion in 2021, with ambitious plans to reach $100 to $150 billion by 2030. FTA influence. The VKFTA 2015 and ASEAN-Korea FTA helped deepen investment and cut barriers for Korean goods. These figures confirm that Korea's private sector investments and government policies have created an extensive economic partnership. But the key question remains: how much of Vietnam's success can we assign to this partnership? If South Korea has one flagship in Vietnam, it is Samsung Electronics. Samsung arrived in Vietnam in the mid-2000s and steadily built huge factories. Today, its presence is often cited as emblematic of Vietnam's export growth. Industry data show Samsung's Vietnamese operations booked roughly $66 billion in sales in 2019, about 1/4 of Vietnam's GDP. In other words, one company's output was roughly equivalent to 25% of all economic activity that year. This was not a fluke. Around 50% of Samsung's smartphones and tablets are produced in Vietnam and exported globally. The analyst note explains. Indeed, Samsung has 4 large manufacturing complexes in Bac Ninh and Thanh Nguyen provinces. These plants churn out hundreds of millions of devices. In the first 10 years of the Thanh Nguyen plant, it produced 925 million phones and tens of billions of USD in export turnover per year. The scale is staggering and has direct implications for Vietnam's economy. Samsung's revenue in Vietnam was reported at about $62 to $65 billion per year, around 2023. That makes Samsung Vietnam one of the largest exporters on Earth. For context, Vietnam's total exports in 2024 were about $405 billion. Samsung alone contributes a large chunk of that. Some estimates put Samsung's share of Vietnam's exports at 20 to 30%. Figures vary by year. In any case, Samsung's Vietnam numbers grew from nearly zero in the 2000s to tens of billions of exports by 2018. Jobs are another major impact. Samsung Vietnam is also an employment giant. Reliable data shows Samsung employed 110,000 people in Vietnam, 2022. These are mostly factory workers and technicians at its mobile and electronics plants. A feature story on the Thanh Nguyen complex notes it created 150,000 job opportunities across the country, including indirect jobs. One data showed that Samsung has the largest workforce of any foreign firm in Vietnam. 65,000 at Thanh Nguyen and the rest at Bac Ninh, over 110,000 total. In sum, Samsung alone employs on the order of 1/10 of the country's formal industrial labor force, and this excludes the hundreds of local supplier factories it supports. Samsung's supply network involves over 300 Vietnamese companies. All this translates to huge value. It has also built advanced R&D centers, the world's largest outside Korea near Hanoi, and spurred higher wages and skills. According to Reuters, Samsung produces more than 60% of its phones sold globally in Vietnam, showing how Vietnam is now the world hub for Samsung smartphones. Samsung by itself shows why South Korea is considered so important. If Vietnam's exports or GDP shrank by 20 to 30% when global demand slumps, as they did in 2023, pushing GDP growth to 5.05% from 8%, one culprit was a slowdown at Samsung. Conversely, when Samsung's factories expand, e.g. new chip or display lines, Vietnam's exports spike. In short, Samsung Vietnam has become a cornerstone of the economy, one that simply did not exist 2 decades ago. Samsung may be the star, but other South Korean firms are also transforming Vietnam's industries. Together, these conglomerates broaden the Korean impact from phones to TVs to cars and retail. There's the LG Group, Hyundai Motors, SK Hynix, Lotte Group, and others. The combined effect is that around 9,000 South Korean companies of all sizes operate in Vietnam. A senior Korean economic advisor noted that these firms are the backbone of economic cooperation and estimates they support about 700,000 Vietnamese jobs. These jobs range from factory workers to engineers to store staff, all tied to Korean-led enterprises. Korean investors also bring technology transfer, albeit imperfect, and management practices, integrating Vietnam into global supply chains. So, what are the impacts of South Korea's involvement into Vietnam? One way to view this is through trade figures. Vietnam is now an export powerhouse. Goods exports reached $405 billion in 2024, up 14% year on year. South Korean firms are behind a large share of this growth. The biggest export categories, electronics, phones, computers, machinery, are the very products Samsung, LG, and their suppliers make. For example, Vietnamese customs data show phones and electronic goods were the top export items in 2023, about $57.3 billion in electronic goods, and $52.4 billion in phones and components. Many of those devices come out of Korean-owned factories. This export strength has turned Vietnam into a frequent trade surplus country. After decades of trade deficits, Vietnam ran a surplus in recent years, about $24.8 billion in 2024. Part of that turnaround is due to Samsung and other exporters outrunning imports. Vietnam imports a lot of raw materials and components. For example, it is a net importer of semiconductors and electronics parts, but then re-exports them as finished goods. In practical terms, every smartphone or TV shipped abroad adds to Vietnam's GDP and foreign exchange. Analysts note that South Korean investments helped Vietnam achieve a trade surplus for the first time in many years, especially on electronics and phones exports. On GDP, the Korean role is also visible. As mentioned, Samsung's output alone has been estimated at approximately 25% of GDP. LG, Hyundai, and others add a few percentage points more. If we conservatively say Korean firms account for roughly 1/3 of Vietnam's manufacturing output, that could translate to 10 to 15% of GDP, given Vietnam's approximately 38% industry share. In 2024, Vietnam's real GDP growth was 7.09%. Robust export growth, led by electronics, was a key driver. Without Korean factories contributing, that growth rate might have been significantly lower. To illustrate the scale, consider that foreign invested firms produce about 70% of Vietnam's exports. If Korean companies account for, say, 1/3 of those foreign factories, they generate on the order of 20 to 25% of all exports. Losing that would be akin to cutting 1/4 of Vietnam's trade engine. This simple math suggests Korean investment has been a major piece of the GDP puzzle. Of course, exports are only part of GDP. Consumption and services also matter. But Korean industry has ripple effects. It pays wages, pays taxes, and sources from local suppliers, all of which further lifts GDP. In short, South Korean firms have had a measurable impact on Vietnam's macro numbers. Citations abound. Samsung's Vietnam revenue was 28% of GDP in 2018, and Samsung-related exports have been reported as over 20% of Vietnam's total exports. While exact percentages vary by source and year, it is clear that Korea's economic footprint translates into multi-billion-dollar contributions to Vietnam's national income.